You're listening to the SBA Loan Experts Podcast, your source for information, tips, and education on the SBA loan program from SBA expert Chris Hearn, founder and CEO of Fountainhead, the nation's leading non-bank SBA lender. Here's your host, Chris Hearn.
Do you have an industry list that you won't do? We don't have an industry list that we don't do as a business. We follow the SBA's guidelines, their rules and regulations. That's not always the case for a lot of the folks that do SBA lending. Oftentimes, particularly some of the banks, they only do SBA lending that falls within their own credit philosophy or within their own loan policies. And that's the reason sometimes some of you have experienced this situation where you submit a deal to your local lender. They're trying to do an SBA financing and ultimately they turn it down and they give you some explanation. And then you went down the street to another lender, explain that to them, and they happen to be more experienced with SBA, and then the deal gets done. Now, why would you ask, why would that be the case? Well, the first lender, of course, sort of overlaid their credit policy on top of SBA's. And that's not something we do. This is where some of you have been doing this for a while. You know, you've probably heard the expression about airball deals for business acquisition loans. Well, a lot of banks, especially some of the largest banks in the country, if they're doing SBA financing, they impose other restrictions on their underwriting, on their parameters, such as, you know, maybe they only will allow for a couple $100,000 of an airball. An airball meaning that there's no collateral. There's not enough collateral to fully collateralize the loan. So banks tend to get a little finicky about transactions, business acquisition transactions where it's very light collateral, but SBA does not have that restriction. So that strictly comes out of that institution overlaying their policies on top of SBA's. We follow SBA's policies, their guidelines. That means we're basically industry agnostic. It's not if you gave us a gas station C-store deal, we're going to look at it just like we would a manufacturing deal, a distribution deal, a franchise daycare, a franchise restaurant, a partner buyout deal of an IT company, an e-commerce website acquisition. I mean, just whatever it is. It doesn't really matter to us. We don't have any industries that are forbidden from us financing. Now, if you're new, I should say, to SBA, you know there's some industries that are absolutely not allowable because they're too speculative. You know, obviously like a Ponzi scheme would be ineligible. You know, anything of a sexually prurient nature, that's what SBA calls it. So, you know, no strip clubs, adult toy stores are going to be challenging, you know, things of that nature, anything that falls into those categories. And frankly, we have a whole page on our website if you haven't been there recently. So just want to put that in perspective. We're not looking to bar certain industry types. We follow along with what SBA has, which is to stay pretty agnostic. We want it to be an eligible small business, you know, a non-public, a privately held, profitable small business, or has a projection to get to a profitability. That's what we're looking to help finance. So anything to add to that, Bob?
Just to add on to that, yeah. Again, in my earlier experience with another non-bank lender, a very large non-bank lender, they had both a watch list and a prohibited list that was multiple pages, whether health clubs. So it's not just the local community banks that may stay out of certain industries. There are some large national institutions that have that list. So, you know, we may health clubs do one and not the other, but it's not because of the industry. It's because of the metrics of the deal. Maybe the borrower didn't have any experience or things of that nature. But the industry alone, other than maybe oil and gas, maybe we would probably be a little shy on. But other than that,
we've done a few of those too, though, Bob. So, yeah. So I just think it's important to keep that in mind. It's better to run something by us so we can give you a quick no, or hopefully more than likely, yeah, that's probably something we could help you with. Anyway, let's go to the next question. So how will I know what stage my applications are in after I have referred them to you? Bob, you want to take that one on?
Yeah, that's a great question. So, you know, with lending, you know, everybody has what I call the silos, right? Origination, underwriting, and closing. So you know that once you've got that initial approval from us, now it goes into underwriting. But where is it? So what our portal will show you is not just that your deal is in origination. But where is it in origination? Are we still gathering information? Have we submitted the deal to credit for approval? Have we issued the approval letter? And if it's come back and now we're in underwriting, but where is it under underwriting? You may have 5 or 6 sub-stages, sub-statuses before you issue the final commitment letter, and now it moves into closing. So how nice will it be for you as your broker, that value that you're providing your client, you can tell him where he is in the stage and what's coming next. This is where the next 3 steps are before you'll get that commitment letter. And you
Right.
can see, so if the underwriter is here, you'll be able to say, when will you be able to submit for final approval, things of that nature. So yeah, it's much more specific.
Yeah, and it's accessible whenever,
Yep.
Historically, you'd have to email us or call us and hope that you caught us at 3 a.m. in the morning when you woke up with this idea that you need to find out where your deal's at. Now you can wake up and log in and you can find it out yourself. You don't have to disturb our sleep necessarily, but it gives much more transparency to you. It's very helpful to you as that trusted source to broker the financing for your client. Having open communication like this is obviously very critical. If you've been doing this a long time, you know that. If you're new to the industry, that's going to be something that you'll probably hear from Bob and I a lot, which is, you can't communicate enough to your client, letting them know where they're at in the process or asking them for, the remaining documents that they need so that you can help them and we can help them get to the closing table. It's really critical.
A lot of what Chris tells the team is, we want to give our clients, whether it's the borrowers and the brokers, windows to our back office. So you're going to see what I see.
Right.
You'll know exactly where your deal is.
Right. Let's go to the next question. It comes from Blanca. How can we help small businesses in need of small loans for working capital or equipment acquisition? I understand I can only handle Fountainhead loans of over $250,000. Well, Blanca, that's going to be changing here very soon. In fact, we've already done a few beta tests, loans late last year and earlier this year that were under our $250,000 minimum. But I need to kind of put this in context for you, Blanca, and for everybody else here, which is, traditionally SBA lending has a lot of borrower documentation requirements. The truth of the matter is, after Dodd-Frank passed back in the mid 2010, 2012, whatever it was, ordinary conventional bank lending and SBA lending are almost identical in terms of the documentation's required now. There's a couple extra SBA forms that your borrower's going to have to execute, but in general, it sort of leveled the playing field. So that's the history. Now, in SBA world, it's always been much more complicated and time consuming for a lender to do a small transaction. Doesn't mean those aren't worthy transactions, doesn't mean those aren't eligible transactions, but lenders have traditionally looked at these things and said, well, I can do a $1 million transaction and I've got a $100,000 transaction that's come in. I'm going to spend the same amount of time on the $1 million transaction as I am on the $100,000 transaction. And frankly, given that, we're probably going to lose money on the $100,000 transaction. So that's historically, just to put this in context for everyone, that's historically why a lot of lenders have had minimums, a certain minimum threshold dollar amount in order for them to be interested in doing an SBA loan. Now, the good thing is that's about to change. There's folks like us and many others, especially some of the most active SBA lenders during PPP. They were able to stand up technologies that they haven't gotten to over the years that have sped up this process. And in many cases, used automation and AI to actually make it more worthwhile, I should say, for their institution to do these smaller SBA loans. And that's going to be the case for us as well. I don't have a date specific I can send out to you, but just know that probably in the next month or so, we'll be entertaining much smaller SBA loans. I haven't decided yet on the smallest deal, but it will be below $100,000, maybe as low as $50,000, may even be lower than that. So you'll be able to do it, and you'll be able to use the same system that we're talking about here on this webinar today. So it is coming. We recognize the need. Obviously, SBA recognizes the need, but there's going to be a lot more smaller loans made from some of the most experienced, most active SBA participating lenders the rest of this calendar year, when perhaps they haven't really had the resources or the tools necessary to do that up to this point. Bob, anything you want to add to that?
Just along with that, the processing time for those small loans will go down considerably. Start to finish, we're thinking of 10 days, 2 weeks.
Right, exactly. So it's coming, Blanca. Hang in there. If you have a really good deal that's somewhat small and you feel pretty confident about it, you're welcome to send it in to us, and maybe we can do some other beta testing for you. All right. Next question comes from Nick. He's back. Can we do a ground lease with 45 years left? We can do ground leases on our 7A loans. Typically, on a ground lease, that's suggestive that it'll probably be a owner-occupied, owner-operated commercial real estate transaction. Obviously, when it's an SBA 7A, those are all fully amortizing 25-year terms. So given that the ground lease exceeds it, that's not going to be an issue for us. If it's an SBA 504, again, it'll exceed the amortization and the term, but we're going to be a little more careful in most cases when they involve ground leases, because of course we have to look at worst case scenario. If that loan goes bad and we're trying to liquidate that property, now, unlike a regular deal, now we also have to make the ground lease payment, the monthly payment. So that's something that sometimes referral agents don't appreciate. They don't understand why a lot of lenders shy away from ground leases, but that's the reason. It's one thing to maintain insurance and taxes on a property that's going through liquidation. It's a whole nother matter when you also have to make a monthly ground lease payment. So anything you want to add to that, Bob?
No, you got that pretty covered.
All right, let's go to the next one. Can you provide the requirements surrounding third-party business valuations? Does the business valuation need to happen before we apply for the loan? Bob, I'll let you jump on that one.
No, I mean, and it is regulated, going back to the days of the 80s, when you had savings banks just,
Right.
let borrowers go out there and order appraisals. And hence the old expression, MAI appraisals stood for made as instructed. So a bunch of regulations were created that now dictate the bank to engage the appraisal.
Right.
But we don't want to incur those costs up front. Let's see if we want to do the deal first, get our arms around the deal. We issue an approval letter, subject to appraisals and environmental reports. And at that point, we usually get a deposit from the borrower so that we can engage those third-party reports. So I don't like to see the borrower spend any money, and then it turns out the appraisal wasn't even relevant. They just spent $5,000 or $6,000 and didn't need to. Let's see if we want to do the deal first, and then we'll engage the appraisal. It has to be an appraiser on our approved list. Environmental reports, again, it has to be certain qualifications that the report has to meet. And there's different level environmental reports. In some cases, we just need environmental assessment. Some cases, a questionnaire. Others, a full phase 1 or possibly phase 2. So, yeah, you don't want to go down that road until you need to. On the other hand, we try not to be linear. A lot of banks say you do step 1, step 2, step 3, and when you get to step 8, now we order the appraisal, and then everybody's at the closing. We're sitting on our hands waiting for that appraisal to come back. Right. We order appraisal much earlier in the process so that, hopefully as these final credit decisions and closings are coming together, these two vectors meet, we're ready to close.
Yeah, I would just say it slightly differently. Instead of saying linear, I always say sequential. A lot of our competitors out there, as Bob said, they don't move to step B until step A is done. They don't move to step C until step B is done. I like to think of it as these things are on different tracks, and we like to be on simultaneous tracks. So what I mean by that is when your client executes our approval letter and sends us our good faith deposit, the sole purpose of the good faith deposit is for us to start ordering those third-party reports. Okay, so we actually initiated at that time so that, as Bob said, they all kind of come together near the closing. But I just find that that's a way to take out some of the arduous timeframes that, unfortunately, there's still some of those myths out there about SBA lending. Oftentimes it's because the client picked the wrong SBA lender. And oftentimes it was a lender who doesn't do SBA, which is why it takes so long. So this is kind of our best practice. We've been doing it this way for a long time. I think it works really well. Frankly, Bob suggested if your client gets one of these third-party reports ahead of time, we will try to use it. We will try to have it recertified to us, but sometimes we can't use it because, for instance, there's different types of appraisals that we could order, and they may have not used one of the approaches that we need to use, for instance. So there's just a lot of different variables that go into this. It's much better for you to tell your client to wait, let us do the ordering since we're going to be the lender. Most important, execute the approval letter, send in the good faith deposit, and we'll get going on this stuff. The other thing I wanted to add about the business valuations, we do it in this way because frankly, if we've approved your client for financing and it is subject to determining that the business that they're purchasing, for instance, it supports that purchase price, right? The value supports the purchase price. If it doesn't, we tell you and we tell your client, and your client then oftentimes will go back and try to renegotiate with the seller. And frankly, it gives them some leverage because now they've got this business valuation that their lender, who's approved them to do this transaction, their lender is saying, we can approve this transaction, but you've got a business valuation that says it's worth $200,000 less than you were buying it for. So there's a disconnect. And then obviously the seller and the buyer need to talk through that and figure out a solution. But that does happen from time to time. And I think it actually puts your client, the buyer, in a better position by doing it in this order.
Hey everyone, thanks for listening to today's episode. Be sure to subscribe to our podcast to be notified weekly of new episodes, and head over to fountainheadcc.com for more about our SBA 7A and SBA 504 resources. Also, give us a follow. You can find us by searching Fountainhead on any of your favorite social media channels. Thanks again, and we'll see you next week.
Today's episode is brought to you by Fountainhead, the nation's leading non-bank SBA lender. Fountainhead's team of SBA experts will guide you through every step of the process and get your loan closed faster and more efficient than any bank. Apply today online at fountainheadcc.com. Thanks for listening, and we'll see you next time on the SBA Loan Experts Podcast.